Hey guys, this is AI Mike Zlotnik, not the real Big Mike. Thanks for watching. I love sharing what I've learned about real estate investing over the years, and I'd like to keep you in the loop. Subscribe to the channel for more of my take, and if you want to see the deals we're working on, head over to tempofunding.com.
Welcome back, strategists. Today we study the teachings of Warren Buffett, the Oracle of Omaha, whose approach to investing has made him a legend. But what truly sets Buffett apart is how closely his philosophy resembles a chess master's mindset: disciplined, patient, rational, and always thinking several moves ahead. At its heart, Buffett's approach is value investing. This means looking for companies whose market price is below their intrinsic value, their true fundamental worth. Buffett seeks businesses with strong long-term potential that are simply overlooked or misunderstood by the market. Unlike speculators chasing price trends, value investors, like Buffett, look beneath the surface for bargains. In chess, you don't win by making flashy speculative moves. The master carefully studies the position and pounces only when the odds are truly in his favor, waiting for opportunities while protecting their core position. Patience and discipline beat guesswork and luck, both on the chessboard and in the markets. One of Buffett's most quoted bits of wisdom is, "Be fearful when others are greedy, and be greedy when others are fearful." This seems simple, its power cannot be overstated. Markets, like chess tournaments, are emotional arenas. During good times, investors get swept up in greed, pushing prices far above real value. During market panics, fear takes over, and the prices fall far below what assets are truly worth. Imagine a crowded chess match where the main audience suddenly panics over a minor blunder. The master remains calm, serves the table, and seizes the best strategic squares while others lose their nerve. In investing, market crashes and corrections are when value investors go to work buying quality businesses at a discount, like claiming powerful squares on a chessboard when your opponent backs away. Buffett famously said, "Price is what you pay, value is what you get." In financial markets, price is dictated by emotion, news flow, and speculation. Intrinsic value, on the other hand, comes from the hard analysis, discounted the future cash flows of a business today, consider its competitive advantage and management quality. In chess terms, this is like the difference between the surface appearance of a position and its hidden underlying dynamics. What looks threatening may not be truly. What seems what looks threatening may not be, can decide the game. Chess masters assess not just the apparent threats, but the true strengths of their position, the intrinsic possibilities. Buffett does the same with businesses, ignoring hype and focusing on core fundamentals. Another great Buffett's lesson is the margin of safety. This means buying with a buffer, never paying full price, even for great assets. If a company is truly worth $100 per share, Buffett wants to buy well below that. Even if he's wrong by a bit, there's still significant upside and downside protection by buying with a margin of safety. In chess, this seems in positions where the master creates multiple layers of defense, ensuring that even if there is an attack, there is plenty of resilience. You don't bet the game on a risky tactic. You prepare, you reinforce, and you avoid catastrophe through planning. Likewise, investors must build a margin of safety to protect against unforeseen risks. Warren Buffett also teaches that it's better to be roughly right than precisely wrong. He doesn't aim for perfect forecasts. He wants solid, reliable decisions based on sound reasoning. This is much like a chess master making plans. The exact sequence might change, but the staying broadly on course is more important than predicting every detail. In fast-moving markets or complex chess games, it's easy to get lost in the details and try to predict every possibility. Instead, build your plan around what you know, the fundamentals, the probabilities, and stay flexible as situation unfolds. Buffett's extraordinary results have come from harnessing the power of patience and compounding. He rarely sells his best holdings, allowing the value to build over decades, not months. This is the chess equivalent of incremental improvement. Each good move builds on the last, slowly converting small advantage into a decisive win, and studying of your own mistakes and the mistakes of your opponents and getting better through progressive improvement and having a great long-term plan. Let's recap what Buffett and chess have in common for winning the investment game. Value first. Don't chase trends. Seek substance beneath the surface. Stay rational while others are emotional. Buy when there is fear and sit tight when there is greed. Seek a margin of safety. Always leave room for error or unexpected circumstances. Aim to be approximately right, not perfectly precise. Let time and compounding do the heavy lifting. Patience turns small edges into big victories. Buffett, like a chess master, wins far more by avoiding big mistakes than by hitting home runs every time. Stick to the basics, master the fundamentals, and always keep a cool head under the pressure. In both chess and investing, the patient strategist wins the long game. See you the next time for more lessons from great guests. See you next time for more lessons from the greats.